All right. Good morning. Good morning, everybody. Still getting a lot of data out of Europe and their discussion of rates. Seeing a little more attitude out of that as well. It's getting a little bit interesting. They certainly don't like the way the election is gone and this discussion of tariffs. A little bit of war fears has lifted Lockheed Martin, Raytheon, the war machine, the war stocks are up. The Nasdaq is down the least, with the S&P right behind it. Then the Dow at a 0.5%. Small caps bleeding the most in the U.S., closer to 0.75%. Hong Kong behind that, with Japan down almost 1%, and Europe really deeper in the red than everything else. We're going to be getting some unemployment data from the states today, state by state basis, which is really going to help kind of validate or confirm the non-farm payrolls data that we got. This one's kind of under the radar. If you look around, you're not really seeing it on any of the major economic calendars, but it is coming in today, and it is a big data piece. If you think about the importance of non-farm payrolls, goes to the heart of the Fed's mandate, right? They've slain the inflation dragon, and now they're working on the other half of that dual mandate, employment. I know, right? They just keep boosting them up there. They want everybody to buy the small caps. Really sounds like they're talking their books, doesn't it? So while it's not on the agenda, you're not going to see it listed in the economic calendars. 10 o'clock is when that state data comes in, and they're really going to be looking at the hurricane states to see if it matches with the non-farm payroll weakness that we saw, because that's what everybody discounted when we seen the non-farm payroll. They said, oh, and no, it's okay, it's the hurricanes, it messed with the unemployment. Well, at some point, we get more data and we get to validate those claims. So today, we're going to see how that goes. Otherwise, we do have more Fed speakers tonight. We're going to get a little bit out of Japan, more out of European Central Bank tomorrow. I think we have Christine Lagarde, not Ledoux, right there. Chris Ledoux is what I was thinking of. But ECB President Christine Lagarde tomorrow. And the 1 o'clock 20-year bond auction tomorrow. Kind of a big deal. That'd be a fun Wednesday. A lot better than today, for sure. But we've got enough on the books for today to keep us busy. There was something else I feel like I'm forgetting. Maybe it'll come to me. All right, so we're back at this 58.88. And if we look at the daily chart, it's that November 4 low, and then the run up to the November 11th high, and then the half back here. We talked about it a little bit on yesterday. I think we might have mentioned it Friday, but I really highlighted it more yesterday. This is not some line in the sand to the tick that we need to be concerned about, right? Just kind of imagine it's a zone. And you can see the defense that they've put into place, that every time we get down into this zone, they've bought it back up again. That's what these wicks are implying. Now, there's an old market phrase that says the wicks are stops and the body of a candle is trades. So, you know, that doesn't always apply. It's just more of just another one of those cute sayings. But whether it's stops or activity, it's liquidity. And at some point, if you keep reaching into the pizza box, grabbing another piece of pizza, there's nothing left. So if we run out of liquidity, we keep testing this low and we don't have anything left, we're going to go lower. On the other side of that, there's the idea that if you keep putting in work and you don't get anything for it, you're going to quit putting in the work. So if we think of all this as buying activity, buyers want to get something out of it. If they're not getting anything out of it, they're going to quit buying. We can see the same wick structure that we have on the bottom across the top. So we're in a little bit of a jam at this point. 58.88 needs to hold, or we're going to revisit 57.25. It's not too bad. On the other side of it, using the same system, we can just measure this low and measure that high, and we get a new half back, and we get a 786 level. Now I'm going to ignore that 786 level at the moment because it wouldn't be how I would apply it. We wouldn't go to the lowest point here. We're going to just turn that off for right now. 59.65. If we're going to rally back, we've got to get above that. To even get to 59.65, we've got a lot of stuff. The 3-week moving average, the 20-day, the volatility trigger. We've got 59.11 cog line, VWAP, 59.32 cog line, the 10-day moving average, our own Globex high, yesterday's high. You see how there's just a lot of stuff up there. Now, it's not to say that we can't do it, but we need something to drive us through all that stuff. Sentiment right now isn't going to do it. Everybody's concerned about NVIDIA's weakness with this Blackwell chip design flaw issue situation. We've got Walmart and Target that, from first glance, Walmart sounded pretty good. I haven't had a chance to go through their earnings yet, but never discount Walmart's earnings. It's a really big deal. Even if you only trade futures, you want to pay attention to Walmart's earnings. So that can change the tone a little bit. It's just not enough by itself, right? We can't correlate Walmart's earnings with the negative feedback we're getting out of Europe. And then we've got all of these levels to fight to get through on the upside. And the sentiment from NVIDIA is still looming on the market. It was supposed to be a hurry up and wait week while we wait on NVIDIA's earnings. And from one point of view, we're still doing that. Monday's high, our own Globex low today, which is still higher than Friday's low. If we're waiting on NVIDIA, we've still got our range. The problem is if we break Friday's low, that happens to be last week's low, I'm pretty sure. So then we'll have an inside week breakout, and it'll be harder to come back inside of it once we do get out of it. The first time we break it should give us a liquidity play like a double bottom bear trap. So if we cut down here, we should respond off of the 111. It's one of my favorite plays. Yesterday's 111, only this would be like 2 or 3 days ago, but doesn't matter. It's the same play. So just remember, double bottoms are a bear trap. If it bounces on the line, it's not much of a trap. It forms an inverted cup and handle, and that very likely leads us lower. So we don't want to do that. We want to get a double bottom that shoots through the previous low and goes lower than that, gets the bears thinking we're actually going to break down, and then we can trap them. The typical goal is to get to the 111, but if we overshoot that, we could get into the 1, 2, 3, 6. We would still look for that to go back up. But the thing is, it needs to be one of those reactions that shows that bears are trapped and that it flips and rips really fast. Some minor example of this would be that sort of activity right here, where it just hit the level and it ran in the other direction. What you don't want is some lingering, dragged out process where it gets down there and it just bebops along the lows and slowly tries to climb its way back out again. Just like a trap, as you would expect, if it's a slow reacting trap, it gives everybody time to get out and then nothing gets trapped, right? Can't run a trap in slow motion. So we want to see a very sharp, responsive, immediate buying trigger and a signal of like a pin bar and a V bottom, tweezer bottom, maybe a morning star reversal, something like that, right? Something sharp and aggressive to bring us back out. I'm really making it sound like we're going to go down there. Of course, we don't know, right? I don't know. You don't know. But I would plan to test this area down here. If we don't go down there, then so what? At least you had a plan. Otherwise, same thing to the other side. We've already tested yesterday's high once. Markets weren't able to keep it, so they gave up on it. And then we got that move out of Europe's data here, and then again here. Well, these are a bit like a liquidity vacuum. So a liquidity gap that needs to be filled. The problem is they're not very clean, so it's hard to kind of line up exactly where the gap is to fill it. You can set it on a 15-minute chart. It might clean it up a little bit, offer some more insight. But either way, if these are gaps in liquidity and we get them filled, it's likely we won't test our own Globex high again. We'll just fall back down again. If we can get a test of yesterday's high, then we'll just use the fib the way we were doing it a few minutes ago. 111, 1, 2, 3, 6. Same thing. Looking for a breakout that gets stuck at the 111. At the worst, it gets stuck at the 1, 2, 3, 6, turns around and comes back in again. If we're going to, quote, hold the line and go sideways into NVIDIA, just remember that the bigger line or the bigger level to hold is all of Friday. And that's a really wide range. So we wouldn't technically have a breakout until we got all the way up to 59.75 area and then broke out. So I would focus on Friday's regular trading hours, not all of Friday. That tightens the range up considerably. And then you can look for a breakout of that instead. $59.40. All right, we've already made the ADR half this morning, which implies we can go to the other side by the end of the day. So concept that comes from using these long enough. If we get to one side early in the day, we can reach the other side by the end of the day. That doesn't say we're going to go there, just that it puts it on the table as something that we could do because we've seen it before more than once. On the other hand, now that we've made it to this low and we've drawn away from it, we didn't stay down here chopping, because that would be different. If we just get there and chop, that's one thing. But we've already left the range. So now if we come back to it and break it, it's much more likely we're going to see the full ADR and then have the opportunity to expand even lower beyond that. If we get one of those kind of days and the ES does get below this yellow line, there's no other ADR levels down here. So as we're expanding lower and you're asking, well, where the heck are we going now? What's the next stopping point? Just remember that the SPY and the SPX, they don't get these ADR lines until the market opens at 9:30. So they haven't hit their lines yet. Now the SPX hasn't hit anything. It isn't moving yet, but SPY hasn't hit its lines yet either, because it won't get any lines until 9:30. So if the ES is breaking down below those yellow lines and continues to fall, look to see if SPY has even hit the red one yet. And it's likely what we've seen before is the ES will continue to fall until the SPY gets to its red line. And if we continue to fall, then the SPY to its yellow line, or the SPX. I like the SPX better, but either one. So these are yesterday's lines, right? They won't update until 9:30 when we get new lines. Not expecting that kind of negativity today, right? But want to have a plan for both sides. All right, today's central pivot is sitting inside of yesterday's central pivot channel. It's a bit stagnant. It doesn't really put us in a bearish or a bullish posture, other than today's is lower on its pivot than yesterday's pivot. That's bearish. We opened above it. That's bullish. It cancels each other out. So we're back to being in a neutral state again. We're underneath the weekly pivot. The ES generally doesn't spend a lot of time underneath that weekly, so we still have a base case argument that we'll get above that. But we need the drive to get above it, some sort of economic news, change in sentiment, tone, structure, something. Right now, we don't have any of that. With that talk of breaking out of yesterday's range, if we do get that breakout, we've got this floor pivot to deal with. One more thing that's over our head, right? On top of all the other things that is up there, we have that too. While we're here, it's worth kind of asking what next. All right, so if we do break the ADR yellow and continue to the downside, what else do we have down there? Floor pivots have 3 S levels, 3 support levels. So 58.66 and then 58.19. It's 2 other support levels. This 66 lines up close to the ADR, I believe. All right, this is turning into a little bit of a flag pattern. And I like this trade that's called a failed flag, right? So typical flag here, we would expect it to go lower. If it fails, that means we didn't go lower. It means we're gonna go back the other way. And if you think about what that forms, it's a big old cup and then maybe has a handle on it, maybe not. So being down in this range or in this zone right now, that's not really a big deal unless we break this low and continue to build on the flagpole. And when we're trying to define, well, how much will the next leg be? Just measure the last leg. So when you do your measurements, you can do 50% and 100%. You can also start it at the top of the flag part itself, not the pole, or at the bottom. Over the years, I've quit using the bottom. It's unrealistic expectations. So I tend to use the top and the full measured move, 5780-ish. We talked about that air pocket all week last week, and we're still holding right in the middle of it, building out a lot of structure. And this point of control back here still hasn't been hit with this week's price action. We cut through it and then that's it. We haven't been back to it yet. So it's not acting in any way like a gravity or anything like that. I wouldn't pay attention to it anymore. There was some possibility of interest yesterday, for an example. If we were going to get close to it, we could hit it. Well, we got close to it. We didn't hit it. I'd say the market isn't paying attention to it anymore. But if we continue to break down, then this one very likely will be 5750. It's an options level. It's a point of control for that week. It's an area of interest. So if we break our own low here on the week, 58.75, there's not much here that's going to help us out and slow us down. We got some elevated volume this morning running at about 164. Some good numbers. I mean, it's been a while since we've seen a consistent run in the hundreds, 120, 101, 164. That's Friday, Monday, Tuesday. That's impressive, especially for this time of year. It's not extreme, just something to be aware of. 58.32 cog line is also the 10-week moving average. I'd say that's a line in the sand that we really need to hold. If we do overshoot the 58.50 full ADR down here, the yellow line, just remember, as much talk as we're doing about the downside today, the base case argument is that we don't break down at all, that we hold the line and we wait for NVIDIA's earnings. Ten-day, 30-minute volume profile with TPO. Nothing's changed here. We're not going to lose this point of control anytime soon. And it doesn't seem like we're going to stay in this zone long enough to move it down. If it does move, though, it will be into this area. So 59.11 hog line, maybe would bring it down into that area. Then we'll just have to see which direction we break from there. If we can break above it, it'll act supportive. If we break below it, it'll act as a resistance. No new VPOC level from yesterday. If we had tried to put one on, see we'd already hit it. And looking at the volume flow this morning, when we dropped down with that Europe news, we got the greatest amount of volume in the overnight down here in this sort of bear pennant formation, but we still had more trades up here, more volume down here. $58.95. It's just in front of 58.92 cog line, like a little bit of a front run. I think if we break that, there's not much to help us out, and we're likely going to test Monday's low again, test our own low, test Friday's low, level by level, right? Just working our way down. It's interesting that the TPO's point of control lines up with that liquidity gap that needs to fill. All right, the base case argument was hold the line, wait for NVIDIA, and so far, that's exactly what we've got. Holding the line, waiting on NVIDIA. Measure Friday's range, mark out your halfback. That's the level we've got to get through if we're going to challenge Friday's high, and then worry about our week's expected move to the upside to continue to climb, or break Friday's low, challenge the week's low, 58.17. We're still 1.25% above the 10-week. It's continuing to decline, so we're getting closer and closer to the 10, like a little bit of a reset. Still not a bad thing. Doesn't put us in a negative bias or any sort of negative posture yet either. So this is just a good gentle decay or fade correction back towards the 10. Even if we're holding the line and not going anywhere, the 10 is coming to us. So a correction in time rather than a correction in price. We're 0.5% below the 10-day. And it is continuing to move farther away from the 10 this morning, but we're still not oversold or in any sort of extreme yet at this point. I think the one thing that stands out that's down this morning is XLF is down. The rest of these really aren't down enough. The benchmark we use is 0.5%. Looking at things that are up, gold, gold miners, Bitcoin, bonds, semiconductors are not up enough. We still need another 10th. Uranium also is moving in the right direction, not enough. Hot stocks, gold, gold miners, they almost made it down to that year-to-date anchored VWAP. Get that close, you know, it seems likely that we're going to just go ahead and hit it, but we're running out of time. Bitcoin made it back to the anchored VWAP. Now we just need to keep it. It's very likely we'll backtrack and test it. There was talk this morning that the move we were seeing in bonds was connected to Europe and not likely to stick. You know, there's been a lot of talk about, are we ready to go long bonds yet? No. I'm in them. I've been long, and that trade isn't working. If you're not in yet and you're looking for a long, it's not time yet. I'd wait for it to get back up above 92 at least, or above this anchored VWAP at 94 would be better. But or get it as close to the low as you can, right? So if we retest the low, get an LRE across that 89.5. Semiconductors holding the line here, but I still like 230, 225, 230. I like that anchored VWAP, especially if NVIDIA, you know, doesn't delight as much as everybody wants it to. All right, we had a pretty decent move in airlines since August. It's been like on rail cars. Topping out a bit. We got a gap that needs to be closed. They're down again this morning. Got an evening star reversal with a gap on the weekly. That's a very negative signal right there. I like this back to $20. If you don't want to use jets, you should be able to use one of the others, like DAL or, well, that one's already bled a bit. UAL. That one's still holding. That one has a lot more room to fall compared to DAL. I mean, jets isn't a bad way to go, right? It's just choices. It's nice to have options. China ADRs still not ready to go. Baba, Baidu, JD, XPEV, Neo, all those guys. And financials. That's a heck of a gap down in the financials. We got a gap down here that needs to be closed around 49. I know it's only 75 cents, but if it's going to pick up speed, looking for an inside week breakout, get below last week's low, and we could challenge the mid 47, just call it 48, round it a little bit. Yeah, well, that's not good. So base case argument, watch the news, expect that we're going to hold the line, waiting on the video. And if the markets do want to wash this, then it's likely they'll dump it to the downside and recover with like a bear trap, double bottom, and get us back inside the zone. There's a lot of data coming out. And if you showed up late and you didn't hear it, there's state employment coming out at 10 o'clock that will help validate the non-farm payrolls data that we had to confirm, you know, is this weakness from hurricanes or is it from something else? I think that's kind of slipping under the radar of a lot of traders. They're just not seeing it coming at them this morning. Be careful, be safe. I'll see y'all tomorrow.